what I really took away with, hey, wait a second, what's going on with banks now, tighter lending standards are doing the job for us. That's something we've actually said on this show, which he's correct in saying, but it's also not bullish for the market because tighter lending standards, banks are going to make less. It's going to be pushed on to the consumer. Consumers are going to be strapped, and we should go lower. So as much as people want to blame it on the Fed today, I don't necessarily think it was entirely their fault.
So do we believe that the markets rose because there was a belief that there would be a blanket insurance policy on all deposits, Karen?
I think it was a little bit of that, but I sort of thought when it came sort of out of the gate, it was a dovish hike. Mm-hmm. I felt like there was a lot of softer language than we've had in the past. And he did say that. And here's the thing, you and I were talking in the green room before the show. Did Yellen hear what Powell said and then decided that, wow, I really need to nip this in the bud? Or do they not know what each other's thinking? Or
was she giving testimony?
She was
yeah. Or
so then she
should have been out there before?
So then she probably wouldn't have heard what he was saying.
Do they text her? I have no idea. But I'm wondering, did Powell misspeak then? Or was he misinterpreted? I don't know. I agree with you, though. It seemed to me that it was the Yellen thing, not the Powell thing.
Yeah, there were two things yesterday the market thought. One was in Fed Fund Futures that we were going to have maybe 70 basis points of cuts this year. And when Powell says clearly, and he said a handful of things clearly today. One is that we still have massive inflation. We still see a very tight labor market. And we're not cutting rates this year, or certainly you cannot expect us to. I am not going to agree that that's happening. And that, along with the implicit guarantees on deposits, I think were part of the real disappointment. Totally agree. I had this as a dovish hike. I heard a guy say all those things, but then also pointing out, that in the language they removed the dynamic about a lot more cuts, and they said maybe some more. And even in the Q&A when he dropped in, what's that?
You say a lot more cuts or a lot more hikes?
I thank you. There will not be more hikes, and maybe the policy going forward could be more firm, but maybe even implies that there could be some cuts. That was something that, to that point, and the equity markets intraday, and as we've seen, ultimately, the market usually has a bit of a zigzag on Fed days. I thought we were going to get that zag higher. I'll just also say, though, until today's sell-off, we were up 6% from the intraday low on the 13th of March. It's not as if the stocks hadn't had a very big rally into this morning when they started to sell off.
Yeah.
So you started off the show saying that Chair Powell said he has no idea what the effect is going to be. So why would he continue to raise rates? If he doesn't know what the effect is, isn't it detrimental to raise rates in that point? He said he would raise rates until something broke. Does he think nothing broke? Or was it inconsequential? So how do you analyze what he's...
You're saying basically that what they've done to date, even prior to the 25 basis point hike, broke the banking.
Well, I think the regulatory system. I think the regulatory system, with banks buying long dated. We know what happened with the banks. They bought too much long dated paper, and that reversed. So maybe the regulators need to put that into their analysis, right? If they're buying too much, there should be something that screens for banks if they own too much long-dated paper where there's a risk in a rising rate environment. How often are regulators in the banks? Every month?
I don't know, but what about bank management? Shouldn't they know?
Of course.
It's not like he just sprung this hawkishness on.
Right.
He has been hawkish.
But there's plenty of things that the regulators say you're out of bounds on. With capital, they tell them.
It's still a problem, Steve. So what do you want the Fed to do?
But there's so much that's out of the Fed's control when it comes to inflation. And now when we're kicking around and we still have those long and variable lags. So this is only going to make things worse. So at the very least, a pause. He bought himself some time where a pause doesn't mean he's stopped. He can go back to raising again. Okay. But today should have been a pause.
What was disappointing about that, though? I mean, I look at today. I thought Powell did a great job. There's no way the Fed can know what's coming down the pipe.
I agree with the desk. It was Yellen's comments that created the market, not Powell's.
So do things change? Does your outlook for stocks change post-Fed press conference? Hearing all that he said, what do you think?
Well, following the bond market, which is on some level back to where we were, and the bond market, the Fed's reputation precedes them. The bond market is saying they're going to cut, they're going to cut, they're going to cut, and I think we've seen it 2 or 3 different times during this whole period. Even in the last 3 months, the market's been wrong about the Fed, and I think this is the dynamic that the market's trying to figure out.